With the US election results seemingly a long way off and growing concerns about the outcome may be contested, what are the markets going to make of any ensuing battle for the White House? John Meyer joins us now from SP Angel. John, welcome. We normally catch up with you to take a look at the mining sector. I will go on to the mining sector in just a minute, but first of all, to the big picture and talk about this delay. We don't know how long it's going to be for. We don't know if it's going to be contested, but of course, markets don't like any sort of uncertainty. What do you make of what's happened and what could happen as a result of this delay that we're now beginning to experience?
Well, I think we could have written the script for this a week ago. It's a closely fought election. America is really split down the middle. I mean, the number of votes cast for each candidate are very close. So a lot of this is down to electoral college type voting. Donald Trump is predictably contesting this and saying he's going to go to the Supreme Court to contest the election. Both candidates are declaring that they're winners, although clearly there's a bit more on the Biden camp at the moment than with Trump. It looks like Trump's really lost this on the back of COVID-19 and his handling of the pandemic, which clearly hasn't gone down well with everybody, and I suspect has swung the election against him. And what it tells us is the American electorate actually really like to have a businessman in charge. They're not overly keen on politicians, if you see what I mean, on career politicians. So they seem to, the impression that we get is they seem to like that tough-nosed business approach. But because of the pandemic, they're going a bit more to Biden. So what does this mean from a business perspective? Well, the dollar has strengthened. We saw investors go for a very risk-off approach last week. It caused a bit of weakness in the stock market. Some of that got closed off yesterday when we saw a bit of a rally, and I think we're likely to see more of a rally anyway. But there is uncertainty because nobody wants to see a contested election here, and nobody wants to see this protracted and uncertain situation for a week or more. Till somebody chooses the next president. So it means that gold and other metals prices have pulled back a little bit. But having said that, we're getting calls from investors who are looking to take advantage of the situation and buy into the weakness. So I think there's no lack of optimism within investors' minds. We're seeing very strong numbers coming out of China, good Caixin manufacturing survey numbers. We're seeing amazing numbers coming out in terms of from the Chinese Communist Party plenary that they've just had, where they set this 5-year plan. And whilst we don't know all the details of that, what we know is the principles that they're focusing on. And we know that they've authorized over 4,000 infrastructure and construction projects. That's worth over 3 trillion renminbi. That's a lot of renminbi, and that's quite a lot of dollars. You divide by about 7 or something like that. In fact, the Chinese seem to be strengthening the renminbi a bit here and there, and this may be part of their dual circulation strategy, where they're going to increase local domestic consumption in China. So there'll be certain regions of China where they start to stimulate consumption of, shall we say, domestic goods, cars, and they're going to focus a bit more on rather than restricting the number of vehicles bought, for example. And vehicles is a good example to use. They're just going to focus on restricting the usage of those vehicles. So you can go out and buy as many Ferraris as you want, but they're going to say, well, you can't drive them all every day of the week, because the problem with China is they've got so many people that you can't have everybody racing around the streets all at the same time, because it's just gridlock. But having built all this infrastructure, people want to use it. So what they're saying is, yeah, go and buy this stuff, but we're just going to, we the Communist Party are going to control what you can do and how you can use it and stuff like that. But so I see their domestic consumption as taking off here. We see a lot more construction going on in China, and they're certainly not slowing down. I mean, for example, lead times for heavy trucks have increased now to over 40 days. So this is all good news from over there. Now what we need is the West to get his act together and start to replicate some of that, and it's not quite happening right now.
Well, part of that, of course, is the fact that the eastern markets, China especially, have been able to control their population far better around the COVID lockdown, the rules there, and so they've been able to control the spread of that better than we have in the West. We're used to a democracy. We like to be walking around within our communities. We like to be actively partaking in businesses. We go out for meals and so forth at will. Now, with this lockdown over here, I know you talk about a lot about the internal Chinese market, internal demand for a lot of what they got, but China does depend very much on the West as well to export to the West. If the West starts to have difficulties, indeed, we're now talking about a double dip recession because the way that COVID has struck at the heart of the very economies of the West, is that going to have any impact at all on Chinese economic activity, do you think?
Well, yes, it will, because it clearly will impact the buying of exports out of China. The thing is that as they increase domestic consumption, I think the idea is for that to offset some of what may be a double dip recession in the West. I mean, I think the US, I think is picking up very well. In fact, the third quarter manufacturing numbers for the States were really good. Unfortunately, they didn't come through in time to help Donald with his election bid, because he really was pinning his hopes on economic growth and doing very well from that. So he's a man that really wants to stimulate the economy. We think the Democrats want to do the same as well. In fact, if anything, the Democrats just want to be sure that the stimulus carries on for long enough in the States so as not to pull the economy back, as happened in 2009. So we had a rerun or a preview of this in the global financial crisis back in 2008, 2009. Policymakers know how to deal with it, and America is very quick normally to turn itself around. We're more worried about Europe, which is always at least 9 months behind the United States and seems to be very slow at dealing with this crisis in many respects. So consumption for, shall we say, industrial minerals and production of steel and things like that is particularly slow right now. And the sort of stimulation of new construction projects in Europe feels woeful. We don't really see much information on that. So that's our worrying concern right now. But I'm not worried about the US. I think even if there is some paralysis in Washington, I still think we know that both sides, the Republicans and the Democrats, want to promote growth. And American politicians have this great thing. It's not good to be seen to be not voting along with the benefit of the US economy. So they tend to pull together and they tend to actually get on with the job, which I love to see, and I wish our own politicians would do a bit more of as well.
And of course, as I said at the top, markets like some sort of certainty. So let's hope we can get back to business as usual. John, just very quickly, some of the stocks to watch out of this. I know that you have a number of clients that operate in the mineral space and you want to talk about them. What is it you want to pull out in terms of some of the activity that you're looking at to give us some sort of optimism about the future?
Well, we're looking at companies that are fundamentally increasing their value in our view. And so there's a few stocks that come to mind. We saw more information today from SolGold. They've announced the first drilling results from their Porvenir project in Ecuador, and I'm pretty excited about this. I've always had the view that the big Alpala project that is being examined and hopefully developed by Newcrest and BHP is not necessarily the best thing in the portfolio. And Porvenir kind of proves this straight off the first hole. There's over 500 meters of copper bearing mineralization, and the first assays off that show copper grades at 0.49% and gold grades at 0.27 grams a ton, and that's really fantastic first drill hole to come through. So that was as I say, over 500 meters of that, we think. And the whole hole hasn't been assayed yet, or maybe hasn't even been finished. So a section of this of 188 meters came in at 0.56%. So this says to me, if they can build up a decent sized tonnage of this material, that this actually might be a better project than the Alpala one that they're spending so much money on at the moment.
Anything else you want to highlight?
Yeah, a couple of rare earth companies are doing interesting things. First, Macango, which has a nice rare earth project in Malawi, is looking over the fence, and it's also looking to prove up a rutile project. So rutile is actually in really short supply in the world right now. Now, I mean, not many people will know what rutile is, but you produce titanium off rutile. So you produce titanium off ilmenite mineral sands and off rutile minerals, well, rutile hard rock or rutile mineral sands. And I think this is quite exciting because we know other people are looking at rutile in Malawi. It seems to be a good place for it. And you can put the material on a train straight down to the coast in Mozambique, and off it goes. And we know, because there's so much global demand for it, and there's an interesting shortage, shall we say, as other rutile manufacturers or producers run out of product. So I think this is very exciting for Macango. And Rainbow Rare Earths announced yesterday that they've gone into a project in South Africa which is a tailings project. It's a gypsum stack. So this is gypsum where the phosphate mineral has been already extracted, and that extraction process has concentrated and reconcentrated the rare earths within the gypsum well, it's not tailings, but the gypsum material. And it's a particularly high grade of rare earths, but also a particularly high grade of neodymium and praseodymium in that material. About 30% of the rare earths is actually neodymium and praseodymium, and that's where all the value is. So we reckon there's about $1.3 billion worth of extractable material in this, and we think the capital costs and the operating costs will be very low because you're mining material that's already been mined. The cost of getting that material into a process plant will be almost nothing, and we think the cost of processing the material will be very low because the rare earths are already in chemical form because of the processing that they've already been through. So we think this is an extraordinary project. We think it's world-class proportions in terms of its value, and certainly world-class in terms of its neodymium and praseodymium content. So it's fundamentally very exciting, and we know the world. Well, we know the West is very keen on getting its hands on rare earths because China controls the global production of it one way or another, and most of that production comes out of China. So I mean, it's particularly interesting for US development funds, people who need rare earths for permanent magnets for these new offshore wind farms, where a lot of it is used, and for the electric vehicle revolution, which of course, I mean, if you're building electric vehicles, you really want to you can put in electric motors without rare earths, but they require more power consumption, and that's not so good for your range. And let's face it, if you're buying an electric vehicle, you want it to drive a bit further than maybe some others. So I think it's a very important material to have strategic sources of.
Just to quickly remind us, what's your business relationship with Rainbow and Macango and SolGold?
Well, as with a lot of these companies, we act as nomad and broker for SolGold and Macango, and we act as broker to Rainbow Rare Earths. And we act for about a third, maybe more, of the mining companies in London. So and we pick out the better ones to work with. So that's what we tend to talk about.
Yeah, indeed. No, absolutely, John. I just wanted to get clarity on that. Thanks indeed for joining us. It's interesting to get your take on where we are in terms of market activity and some of the stocks to watch out of what, looking increasingly though, we could well see some sort of contesting on this US election result at some point in the next week or so, if we don't get some sort of clear indication of either a Biden or a Trump win in the next few days. That's John Meyer from SP Angel.